Good late morning, everyone. Andy here. We're going to go ahead and do a mini recap session today, and actually it probably won't be too many. We're going to accomplish a couple of things during the recap. We're going to highlight and define the entry triggers for several of our trade setups. By the way, today is Friday, May 31st, the last day of May. And we're going to look at the DAX market today. We're going to highlight the DAX. It was the cleanest market of the main markets that we watch. Crude oil, gold had a bunch of winning trades also, but the price action overall wasn't as clean. There were more losses sprinkled in, and even more so than just the win losses, the overall price action wasn't as clean. Didn't have as quality momentum, didn't have as quality form and flow. Really, the market of choice this morning was definitely the DAX. So let's start off and take a look at the Pulse Extreme line cross. That's these arrows here. You see this blue arrow? Blue arrow means a Pulse Extreme line cross buy. There's another blue arrow. Red arrow means a Pulse Extreme line cross sell. They are auto signal calling indicators. In other words, I didn't place these arrows on the screen. They're generated by the sniper system itself. And here's what causes those arrows to be generated. Here's the entry trigger. Okay, what we're looking for is a situation where this black line, first of all, this indicator here is called the Pulse Extreme. And what we're looking for is when this black line crosses from the gray area over the white gap to the colored area. And it gets to at least the second colored line or higher with an up-close bar. That's going to generate a buy signal. Now, the more you watch that, it's so visual. You know, it takes you about 90 seconds to learn it, and then as you watch the trades occur, you just watch that black line. When it crosses over the white gap to the colored area, you know you're going to get a buy. When it's in the colored area and crosses over the white gap to the gray area, you know you're going to get a sell. Doesn't get much more visual and easy to define than that. Now, where do we enter? Well, the standard entry is the open of the next bar. Okay, so we're anticipating this trade to occur. When the black line crosses over, we know that when this bar closes, we're going to get a signal because we can see where the black line is. So we can anticipate that, and we put a buy stop for those individuals that have their trading plan designed to execute this trade. For example, we would place a buy stop at the open of the next bar. And the cool thing is we don't have to figure out what that opening price would be. The indicator tells us, our tools tell us. We have this green number here and red number there. Tells us exactly where to place our entries, our entry orders. So it's really, it becomes pretty simple and basic. We watch for the black line to cross. We know when it's coming. We anticipate it. We put in buy or sell stop orders depending on whether we're going to be a buyer or a seller. And that's all there is to it. Now, how much profit you're going for and how much stop you're risking really comes down to each individual trader. And we help throughout the 90 Days to Success training course and the roadmap process, we help you define what fits for you. Some traders use stops as small as 5 ticks. Other traders use stops as big as 12 ticks. Some traders go for profit targets as small as 5 ticks. Other traders go for profit targets as big as 20 or 25 ticks. You can see a lot of these trades have a lot of profit available. But the decision-making process on that comes down to each individual trader. Okay? So that's the Pulse Extreme line cross. Now these dots and diamonds are the standard sniper signal. It's another one of our 5 or 6 sniper trading systems. And the standard sniper signal is generated also in a relatively easy to learn and understand way. I'm going to put manually on the chart here what we call our buy zone in the case of a buy. When the market is trading live, you would see magenta lines just like this pop up on the chart. And it defines the buy zone. And let me talk about that a little bit more. Okay, so this market is coming lower. You can see the red bars moving lower. When we get two transition green bars, that tells us that we are going to have the possibility when that second green bar closes, we're going to have the buy zone. These two magenta lines are going to pop on the screen, and we're going to have the possibility of a standard sniper buy. And what has to happen? That second green bar closes, the buy zone comes up, and then we got blue bars. The price action has to trade down into the buy zone. We have to at least touch the upper magenta line. And then if we get an up-close blue bar, that is going to fire a standard sniper signal. So it's really that simple. We watch for situations where we have two green bars in a row. When the second green bar closes, we know we're going to have either a buy or a sell. In this case, the bars were red, and we're transitioning to green, and then we're going to get blue. So this is a buy opportunity. Once the market trades back into the buy zone, closes up with a blue bar, bam, we get a signal. The entry is the exact same, the open of the next bar, and we're anticipating that open. So in the case of this trade, you would have got into the trade, taken a little bit of heat, and then gone on to be a nice winner. And obviously, the opposite is true for a sell trade. Just works the exact same in reverse, like up in here. Okay, so those are the standard sniper and the pulse extreme line cross. You know what? I'm actually not going to take the time to define the PEDC because we did it yesterday. So I'm going to encourage everyone to watch yesterday's recap video where we did take the time to define the PEDC and the entry trigger for the PEDC. Okay? So that way we can spend the rest of our recap time here on looking at the actual trades that occurred today in the DAX. So headed back here to we open our room around 8 o'clock, and I come in and start active commentary and market trading and breakdown around 8:30. So around 8:16, you'll see we got a pulse extreme line cross short here. Nice easy winner. A lot of traders will wait for action line confirmation. Okay, they won't get short until the action line starts to slope down. They won't get long until the action line starts to slope up. And a lot of the pulse extreme line cross trades, the action line's already sloping, so they'd be getting long right away. But that's just one of the combination of tools that can keep you out of some bad trades. Only trading pulse extreme line cross trades in the direction of the action line. So getting started here, you can see we have 3 pulse extreme line cross winners in a row. Not a huge win here on the buy side, but again, 7 or 8 ticks available. The sell side, huge win available. Let me back things up and remember, let's look at this black line, okay, crosses over the white gap, we get our short. The black line's in the gray area, crosses to the colored area, we get our long. Black line's in the colored area, crosses over the white gap to the gray area, we get our short. Black line's in the gray area, crosses over to the colored area, we get our long. You see how this works? Pretty simple. Look at the magnitude of most of these trades. Crosses over the white gap to the gray area, we get our short. Okay, this is a PEDC buy for a nice win. 1 down close, 2 down close, 3 down close, only 1 down move in the pulse line. Then we get an up close bar, up hook in the pulse line, we're long, nice winner. Follow that up with a pulse extreme line cross, boom, nice trade. Big win, in fact, right? You can see we did not end up getting a sell, even though the black line crossed over the white gap to the gray area, because we need an up close bar, right? We need to get to the second gray line or lower and have a down close bar for a sell. And that doesn't happen. This bar closes up, so it doesn't generate a signal, and then we never get a down close bar, so there's no sell, which in this case is better, obviously, because the market wanted to move higher. We get reinitiated into another long trade. Only about 6 or 7 ticks available in that one, not a ton, but a winner. Short up here as we cross back, black line, colored area over the white gap to the gray area, short, winner. Standard sniper, winner. Pulse extreme line cross, not a big win, but a win. You see the black line crossing over, winner. It resets again, no sell, because we didn't get a down close bar when the black line was at -2 or lower. Generates another buy, Okay, just after 950, we get a standard sniper sell, and then another pulse extreme line cross short. Okay, so clearly, as you guys can see, very sharp today. You know, these three systems were just kicking tail. We do have a few losses coming up, but obviously a lot of winners. Standard sniper, 6 or 7 ticks available. Pulse, excuse me, this is a PEDC buy, huge run. Pulse extreme line cross, 7, 8 ticks available. PEDC, 6 or 7 ticks. Standard sniper, nice win. Pulse extreme line cross, black line crossing over to the gray area. Boom, short. And is this the first loss of the day? First or second loss of the day. Standard sniper just doesn't get any momentum going. It was a losing trade. Next standard sniper winner. Pulse extreme line cross winner. Standard sniper winner. And now we're coming up closer to live price action. Gorgeous pulse extreme line cross winner there. A couple of losses. Now, some traders would disqualify all these trades based on consolidation. Okay. We come up in here. By the time we put in this pivot, and this pivot, we know we're in consolidation. Especially, you know, if you took this trade and it was a loser, most traders would not, many sniper owners would not take another trade until we broke out of this consolidation area. So you wouldn't be taking either of these last two trades. But again, if you took them all, you see the outcome. And we got a pretty strong vertical move. Ooh, I love this trade. Very, very nice sell signal. This is also a PEDC, so this is a combination PEDC with a pulse extreme line cross trade. Okay, so very nice trade. Couple of standard sniper signals fire here. Obviously, our sniper owners use different things to, you don't want to be selling every single standard sniper when you have a really strong trend going on, but we'll mark them as losses nonetheless, even though there are definitely techniques to weeding out a lot of those losses. So let's count up the wins and losses for the day. We got 2 wins, 2 losses there. We'll count all these. 3 wins, 4 losses. 7 wins and 5 losses. 8 wins, 9 wins, 10 wins, 11 wins, 12, 13, 14 wins, 15, 16, 17, 18, 19, 20, 21. We're still at 5 losses. 22, 23, 24, 25, 26, 27, and 28. 28 wins, 5 losses. And honestly, most traders that I know would not still be trading. Well, you know what? Honestly, this isn't bad price action in the DAX, but overall the markets have slowed down, and because of that reality, most likely we wouldn't have traded these 3 trades. And when you have a vertical move going on, when the price action can't even break below the action line, most traders aren't going to be jumping in on these signals either. Another thing we look at is quality divergence, and it's just choppy here. There's no quality divergence. When you have a quality divergence in the OS line associated with a standard sniper, makes it a more quality signal. Neither of those two had quality divergence. Let me show you. So this, for example, was a much higher quality standard sniper signal. It didn't yield a huge win, but it did yield a winner. You see divergent peak 1 to 2 and then 2 to 3. Really quality divergence, much different than we saw on those other 2 vertical moves to the upside. Same thing here, you know, a much cleaner, higher level of divergence than on the other trade. Even here, you know, much more clean, crisp divergence, okay? So the last 4 losing trades that were 4 out of the 5 losses for the day, just using, you know, being a trader instead of a robot, you really could have eliminated all 4 of those losing trades. You would have eliminated 1 loss or 1 win. So that would put your count, instead of 28 and 5, you'd be at 27 and 1. Not too shabby. Anyway, that's, guys, a wrap. And that's what we do here at the Sniper program with the 90 Days to Success training program. We teach you guys how to be traders and not to be robots. Clearly, as you can see exemplified in this, looking over today's trades in the DAX for the Standard Sniper, the Pulse Extreme, and the PEDC, you can see our systems are pretty doggone good. You know, they're very accurate, they're very robust in nature. But it's not just the systems, guys. It's understanding who you are as a trader, being able to mold the systems around your personality and characteristics. Those are the things that are going to help you be able to succeed, and it's what we really hang our hat on and do dramatically different than the rest of the industry. All right, guys, that's a wrap. Great last day of the week and of the month. Have a wonderful weekend, and we hope to see you all back here on Monday, first trading day in June. Take care, guys.